Hey there, and welcome. We're going to spend the next 5 minutes demystifying the stock market. No complicated jargon, I promise. This is your simple, clear-cut guide to finally get started. So, let's kick things off with a really important question.
So let me ask you something. Really think about it. You work hard for your money, right? But is your money working hard for you? Or is it just sitting there in a bank account, not really doing much? Is it actively growing and building your wealth for the future? That right there, that's exactly why we need to have this conversation.
Okay, so you might be thinking, why not just save my money? Isn't that safer? And that's a fair question. But here's the thing. The reason we invest is to tap into the incredible power of growth. It's how you fight back against this invisible force that's constantly eating away at your savings.
And that invisible force? It's called inflation. You've seen it, right? Every year, stuff just seems to get more expensive. That means the cash you have tucked away today, well, it's going to buy you less and less stuff down the road. It's literally losing its purchasing power. Investing isn't just about getting rich, it's your #1 weapon to fight back and actually beat inflation.
And look, you don't have to take my word for it. The proof is right here in the numbers. Your savings account might give you, a tiny fraction of a percent? But the stock market, historically, it's been a powerhouse. We're talking an average of nearly 10% a year for the last 30 years and almost 11% over the last 50. This shows you, plain as day, how investing isn't just about keeping up. It's about getting ahead.
All right, so let's talk about the big one. What is the stock market anyway? It sounds so intimidating, right? But I promise you, the basic idea behind it is actually super simple. Let's just strip it all back to basics. Okay, everything starts with one thing, a stock. Just picture any big company you know, Apple, Microsoft, Amazon, whatever. A stock is just a tiny little slice of ownership in that company. When you buy a share, you're not just a customer anymore, you're actually a part owner. You get a tiny piece of the pie.
So if a stock is a piece of the company, then the stock market, well, it's just the giant marketplace where all those pieces get bought and sold. Think of it like a huge flea market or an online exchange, but for company ownership. That's it. It's just a place to trade. Okay, theory is great, but let's get to the good stuff. The part you're probably waiting for. How do you actually do this? How do you get started? I'm telling you, it is way, way easier than you probably imagine. Let's walk through the exact steps you can take, like right now.
Seriously, it boils down to just 3 steps. 1, open an online brokerage account. It's basically a special bank account just for investing. And guess what? A ton of them have 0 fees now. 2, you move some money from your regular bank into this new account. Easy. And 3, you use that money to buy your first investment. That's the whole process. Simple as that. So, once your account is funded and you're ready to go, you come to a fork in the road. You've got a big choice to make. There are basically 2 main ways to approach this as a beginner, and they're pretty different from each other.
And that choice really comes down to this question. What kind of investor do you want to be? Are you the type of person who wants to be hands-on, doing the research, picking individual companies you think are going to be winners? Or are you more of a hands-off, set-it-and-forget-it kind of person?
And this breaks it down perfectly. On one side, you've got stock picking. This is the active route. You're the detective trying to find that next breakout company. It takes more work, for sure, and there's more risk, but the potential reward can be higher too. Then on the other side, you've got index funds. This is the passive way. Instead of buying just one stock, you're buying a whole bucket of them all at once. Like an S&P 500 fund gives you a tiny piece of the 500 biggest US companies. Bam, you're instantly diversified. It's way lower risk and it's perfect for that long-term, hands-off strategy.
No matter which path you go down, active or passive, the real secret to success often has less to do with what you buy and more to do with your mindset. So let's cover 2 super simple but absolutely critical rules that pretty much every successful investor follows.
Okay, rule number 1 is so important. Patience. The stock market is not a casino. It's not a get-rich-quick scheme. Real, lasting wealth is built slowly, over years, even decades. You got to treat this thing like a marathon, not a sprint. If you do that, you'll dodge all those expensive mistakes people make when they get greedy.
All right, and now for rule number 2. It's all about one simple time frame, just 1 year. So why is 1 year the magic number? What's so special about it?
Well, here's the deal. Holding onto your investments for more than a single year can be a total game changer when it comes to taxes. See, if you buy and sell in less than a year, your profits get taxed just like your regular income. But if you hold on for more than a year, those profits get a special, much lower tax rate. So yeah, Patience literally pays you to wait. And that's it. In just a few minutes, we've covered why you should invest, what the market even is, how you can start today, and the 2 golden rules for success. Look, the stock market isn't some secret club for Wall Street insiders. It's a tool, a powerful tool that's available to you right now. So the only real question left is, are you ready to start your journey and make your money work for you?